How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for Euro versus US dollar, EU, and as you can see for Wednesday, this is Wednesday's candle. Even though you can see the new daily candle formed, it is still Wednesday. It's Wednesday night. It's currently Asian session that I'm recording this. We can see Wednesday was a large dynamic candle, and it confirmed our higher swing low. So the middle candle here, its high is broken by this candle here, confirming this higher swing low. That came by way of after breaking a swing high formation. See all the caution signs or exclamation points? That's normally or generally where a swing high was broken. Once that swing high was broken, I was most likely expecting whether or not if it's going to be a false break or is it a new trend unfolding. We can see it was a new trend unfolding because if you bring it back just into June here, June runs up and takes out this first swing high. So technically the first caution sign should have been here. Once that swing high was broken, we'll zoom in. Once this swing high was broken, all we had to do is wait for the higher swing low. 1, 2, 3. That's the third candle. Once that candle's high was broken, you have more confirmations to go long. And you can see it keeps repeating the same cycle. Break a swing high. Look at this right here. This is a swing high. What do you have to wait for? Higher swing low. I was able to see that price is most likely going to continue going higher with this confirmation. Same thing here. Price runs up, takes out what? This swing high. There's the exclamation point here. Another swing high broken. 1, 2, 3. All you have to do is wait for a higher swing low to form. It didn't form until the following week. It ran up, this large candle here Thursday, here, takes out another swing high. And then the higher swing low is formed here. That's what we recently have in price. And now what is it doing again? It's breaking a swing high. That's what SH stands for, swing high. And it's running up. And what is it most likely drawing to? Another swing high. So this high point here, you can see if you look at the top here, H. I hover my cruiser here, H. You can see the price point there. It is 1.10538. And on the left, you can see the high is lower. And then on the right, you can see the high is lower as well. So that's the swing high candle. Price is most likely going to target and aim for that. That's where buy-side liquidity is residing. Many people ask me, do we know if EU is going to get to the 20-day look-back high? Look how close we are to it now, right? Many people were asking me in the channel, in the chat, are we going to get to the 20-day look-back high? I said it is a potential possibility, and look at how close we are to that swing high. That 20-day look-back swing high is right here. Let's just take where we are right now in price. We can see we're not too far from it. All right, we're about 100 pips away from it. And most of these daily candles are definitely a little larger than 80, 90 pips. Some of these are larger than 100 pips. For instance, let's take this candle here. This candle is larger than 100 and nearly, about to say, let's just say 150, about 150 pips in that candle that was made. If we look at the DXY, it is inverse to what is happening on EU. So if we look at the DXY, we got that lower swing high formation, and it's forming where? Inside this fair value gap. So like I said, it all started with this, that swing low being broken, lower swing high. Price repeats the same thing. Swing low broken, lower swing high. That's what that stands for. LSH, lower swing high. All inside of what? The inefficiency. And I said time and time again, odds are if you're going to get that lower drawback or higher drawback, it's most likely going to form inside that PD array. And you can see that fair value gap here, and then price trades lower. And the same thing occurs again. Look at that swing low. Caution sign here. Swing low was broken here. That's that swing low. 1, 2, 3. It's broken. All you have to do is wait for what? A lower swing high to form. And that's what we got there just now. Today, Wednesday, this large candle confirmed it. Notice how we got 3 up close candles. 3 up close candles and then a large down close candle. These are all small relative to the last 3 to 5 days. This large candle, right? This candle's large. These bodies only are smaller than this candle's body. So that's expected. But these are 3 days that the commercials found themselves probably repositioning themselves to go short. People asking, how do I know that? Because I can see the trend is continue to go lower. Every single time you get up close candles in a downtrend. And people don't take me serious when I say this because it's night and day. Anytime you get an up close candle in a downtrend, it's most likely a counter trend candle. And you can use that as a potential opportunity to tell yourself, I should be looking to go short sooner or later, maybe tomorrow after the up close or when a lower swing high forms. You can see that up close. Look at all the down close candles after it. Up close, down close, down close, up close, down close, down close. Many people have been speculating potentially dollar coming back bullish. However, I don't see anybody within the community right now personally giving me any context or evidence to tell me that dollar is going to be bullish again. I still think dollar is still reaching down, potentially probably going to get back down to that swing low here for the 20-day look back low for the June IPTA data range. Now for further investigation, right? I take it a step further. Even though I'm just watching EU for the month of June, that doesn't mean I'm not looking at other pairs. Same thing vice versa, just briefly here. Notice it's an uptrend, but notice every down close candle in the uptrend. What happens after these down close candles? Buying. Buying is occurring. They're repositioning themselves to go long potentially. And you can see how these down close candles are a part of that swing low, that higher swing low formation, because eventually there's going to be some type of pullback to psychologically get retail traders on the wrong side, which is why you get people confused. It's like, how did you know EU was going to continue bullish? Because I know that the market is just chasing liquidity if it's going to trend. It's going to aim for swing highs, buy side liquidity, and a bullish trend. Same thing vice versa for DXY. Sell side liquidity in a bearish trend. It's night and day. You can even see when the dollar was once bullish, like this leg here, up for the month of May. Look at every down close candle instead. So it's inverse of what's happening now. I was telling you look at every up close candle on the way down, but look at every down close candle on the way up here for the dollar. Look what happens every time we get a down close day. What happens after all these days, guys, in that uptrend? It's pretty easy to see it. Buying. They're buying after the down close days. You can see how they were accumulating the orders and finally it broke out. And now we're probably coming back down to take out these clean lows. Sell side liquidity. And that's what probably is occurring right now. But like I said, to take it a step further, just because I'm looking at EU doesn't mean I can't look at GU. I can look at GU as well. I can see what it's doing as well. So what has happened recently in price? We can see this is the opening price for June. It dropped down below the opening price. So just to say this is the open of the month. At one point in time, it was in a discount for the month. People ask me, you say that the commercials only sell in a premium. They don't buy in a premium. They do buy in a premium. Because at one point in time, they sponsor their positions below discount. We can take a educational guess, right? An educated guess that their max longs most likely occurred, or their highest net long positions most likely occurred at discount. But that does not mean they won't be buying in a premium. If that was the case, right, someone asked me, don't they only sell in a premium? They don't buy? If that was the case, wouldn't price just keep doing this around the open? Buy, discount, sell, premium. Buy, discount, sell, premium. So then it would just be bouncing back and forth. The market will always be moving sideways along fair value of the opening price. The market has to trend eventually. So once price enters the premium, does that immediately tell you you must be looking for sell setups only? No, that's not the case. Maybe from a week-to-week perspective, yes. But when it comes to the actual candle's life cycle, there's going to be a protractionary phase. So there's going to be a fake move on retail traders, either above or below the opening price. We can see here for British pound and even EU, because it's directly correlated, there was a fake move below the opening price. Price dropped down, right? You see how price drops down and then goes up higher. Down, up higher. There needs to be some type of range expansion to the monthly candle. The monthly candle is not just going to automatically drop down here, buy, come back up here, sell, back down, buy, back up here, sell. That's not logical, because the market needs to get to certain areas or where there's old orders residing. It's not going to stay back and forth for the entire month. I just want to clarify that. People get confused. Oh, it's in a premium, so I have to be hunting sell setups. That's not necessarily true. There may be sell scalp opportunities, right? So if price breaks a previous daily high, you can probably find a nice sell opportunity during the London close, or a Thursday high of the week, or Friday high of the week. You can potentially find those pullbacks. But that's not going to be the case every single day. Once price crosses over here, you must only be hunting sell setups. No. Once you have the bias at hand and you understand what price is going to aim for and what it could potentially do, you follow that. If we continue with the same theory of a swing high being broken, we can see the same thing is happening here for GU. Look right here, the exclamation point here, right? The caution sign, whatever you want to call this. It's been broken. What did you have to wait for? A higher swing low. That's that dash line here. It's higher than this swing low here and this one here as well. You could already tell the trend was already starting to go bullish. Those are the natural price telling you commercials are most likely looking to go long, or they're about to increase their net longs, and you better find a swing point to catch the expansion to the upside. You can see price again comes up. What does it do here? Swing high broken. Make it red. Go up here. What do you have to wait for after breaking a swing high? A higher swing low. What happens here? Is that not a higher swing low, guys? It's very logical here, what I'm showing you. It doesn't take too much. I think a lot of people overanalyze what I'm talking about. I'm a very simplistic dude when it comes to my trading. That's a higher swing low. This swing low, 1, 2, 3, is physically higher than this one. Another down close candle. Now we're looking at British pound. It's the same thing with EU. Another down close candle. What happened after this one down close candle? Look at this bullish run. People want to know how to catch expansions or range expansion or dynamic price action. I'm showing you guys it. People want me to sit here and show them the exact entry point. I'm not going to do that every single time. Those are going to be things you have to figure out for yourself. Because my entry techniques may be completely different from yours. But how would I do it if somebody had to ask me? I would set a limit or a buy stop at the open and close of any down close candle in the uptrend and get knocked in on weakness and on strength at the down close. So the open of the candle, that's a buy stop. At the close of the candle, it's a buy limit. Price comes down, hits my limit, I'm in long. Price comes in, hits my stop, I'm in long. On strength and weakness, that's how I would do that. And you can find dynamic days like that, especially if the previous day is small and it's a down close and a uptrend. A lot of confluences here. Go down. And even more recently, like I want to continue explaining this. Look at this here. What is this? Another swing high broken, guys. I can't make this stuff up because show it time and time again. And people think I'm doing something very fancy. I'm not. Swing high broken. Wait for higher swing low right here. Somebody was telling me that dollar was showing signs of other things, right? Oh no, actually it's not going lower, it's going higher. And I said, no. Did you look at the inverse correlated pairs like GU and AU? And did you look at the correlated pairs like UCAD and USWISSY? Totally different story there. They told me that dollar is showing a different story from what I was showing them from the DXY, and I totally disagree. I think the dollar is still bearish, guys. Higher swing low. 1, 2, 3. We don't have it confirmed yet because the candle's high here hasn't been broken. But I would expect that we have 2 down close days right here. They're loading the boat to go long once again in the inefficiency. Look at that. Once again, does this not look like the dollar index? What I showed you. Looks just like the dollar index. If we went back to the DXY, you look at all the blue boxes, you see that's where the lower swing high was forming every single time. So I'd like to see the high broken now. I want to see price. It purged the previous daily candle, right? And now tomorrow, Thursday, even though the daily candle is already formed and it's still Wednesday and it's showing Thursday, we want tomorrow's Thursday candle to reach up and take out this high. That's what we want to see for GU at least. Same thing for Euro. So let's not just get sidetracked. EU has already ran up there, right? Price broke this high. We probably have a high probability rate on this candle's high. So Friday may run Thursday's high, right? And it will probably run this swing high and that swing high and this swing high. So you can see how easy it is to track the bias in such simple steps. And how to figure out bullish and bearish and how to differentiate whether or not you should be looking for buys or sells. I'm looking for buys in an uptrend when I know the down close candles form. That's it. If we look at, for instance, UCAD, just to jump onto UCAD, I've been slowly marking it down, but you can see even this here too. I have it really light. Ooh, too bright. Look at that fair value gap. Look at how price creates a lower swing high. All these swing highs are lower. Look at the red line. That's a swing high. That's a swing high. That's a swing high. What makes a swing high? The candle on the left is lower, and the candle on the right is lower. This makes this the swing high in between these two candles. So that's a swing high. Doesn't matter about the bodies, just looking at the wicks here. Same thing here. Swing high forms back inside the fair value gap after breaking this swing low. 1, 2, 3. Price runs through with speed. Got a SIBI, sell side imbalance, buy side inefficiency. Market comes up, fills it a little bit, and then it books the orders and goes short. Up close. Look at that. Up close. What happens after this up close? Sell, 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 sell. Up close, sell. Up close, small body, large sell. Down, up close, sell. And you can see how the new daily candle that opened for Thursday is already selling down. So many people are saying dollars bearish. I mean bullish. Show me that on the pairs that are based in the US dollar. Because if it's bullish, UCAD should be showing signs that it's bullish. Same thing here. Your Swissy. It needs to be showing me signs that it's bullish. It doesn't show me any signs that it's truly bullish. It's still running lower. You can see every up close candle, up close, was met with selling very fast. They want to run away from the up close candles. That's what I like to say. When the market is bearish, the price action is trying to run away from up close candles. They're not friends with the up close candles. They're trying to move away. Same thing, vice versa. So hopefully this was insightful. Like I said, I stand on foreign currency gaining strength. So GU, AU, EU, NU going up. Just to check it real quick before we go, because I don't really check New Zealand dollar. Yeah, bullish. Night and day. It's bullish. It's been bullish from the start of June here. Look at every down close candle, folks. I can't make this up. I just can't. I can't make this up. Down close, down close, down close, down close, down close. And look at how they're trying to get away. The market is trying to open, get away from these down close candles here, and then start making some new territory again. And then another higher swing low is going to form. So it's up, break down, up, short-term low, back up, short-term low, back up. And that's how it's trending. That's how it's trending. So hopefully you found this insightful. Peace.